the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for the day. Singapore shares down as investors continue to monitor global trade tensions. Now, the Straits Times Index was down 0.29% at 3,897 points at about 2:20 p.m. Singapore time, with a value turnover of 826.6 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI ended further in the red, down 0.46% at 3,890 points. In terms of value turnover, we are looking at 1.37 billion Sing dollars. The gainers trailed losers 182 versus 359. Top advances for today, we've got here ST Engineering, Hong Leong Asia and UOL, and top decliners we've got here Jardine Cycle and Carriage, GMH USD and DBS. Now, in terms of companies to watch, we have Yangzijiang Shipbuilding, given how customers who initiated arbitration proceedings against 3 of its units over alleged contractual breaches have been awarded a right to a refund of $3.32 million in deposits. Now, elsewhere, from US President Donald Trump slapping more tariffs on goods from Mexico, Canada and China to more on China's 2 sessions, which kicked off today, we've got more international headlines in focus. And joining me on the line is Dan Chang, investment specialist and trading representative at PhillipCapital. Dan, are you there?
Yeah, hi, Tian Tian.
Great to have you join us, Dan. And let's start off by looking at global investor sentiment this time around. Stock markets in the U.S. tumbled overnight. U.S. President Donald Trump confirmed tariffs on Canada, Mexico and China. Now, we've seen how Canada responded by putting 25% tariffs against a 155 billion Canadian dollars worth of American goods. Beijing also retaliated. How are U.S. investors reacting to the heightened volatility?
Well, Tian Tian, I think it wasn't the best of night last night, I have to admit. I think the numbers have already spoke for themselves. Overnight, on Wall Street last night, we have seen S&P down a whopping more than 100 points, Nasdaq plunging 497 points, and Dow Jones dropping 600 points. So in a nutshell, right, the U.S. market actually took a hit last night as investors react to this President Donald Trump's confirmation of this new tariff on Canada, Mexico, and China. The S&P 500 and Nasdaq, right, both saw very sharp decline, as mentioned earlier. But I think the most hit sector will be the automotive, the agriculture, and technology and retail. Okay, so automakers like Ford and GM dropped as much as 3% due to supply chain concern. Agricultural machine companies like Deere & Co. slide over more than 6%, amid fear of reduced demand. And tech stock, of course, also struggled. We are very familiar with it. Apple, Nvidia, all falling around 6%, given their exposure to China. And retailers like Nike and Best Buy are feeling the heat as well. So with Canada and China vowing to retaliate, I think investors are bracing for more volatilities ahead, and I think they are worried about the broader impact of this global growth as well.
I do want to clarify. I was looking at the latest developments. I believe China retaliated just about 1 to 1.5 hours ago. But in Asia, let's stay in Asia, then equity prices fell across the board. Japan's Nikkei and Hong Kong Hang Seng among the biggest losers earlier, down more than 2% and 1.5% respectively. I understand they paid those losses, but do you think there's more to go for the downward movements? When can we expect some signs of stability, especially for the automakers like your Nissan, Toyota and Honda?
Yeah, so, following a meltdown in U.S. market overnight, right, I think it's expected that Asian market took a beating today. But to be fair, as you mentioned earlier, right, the Hang Seng Index actually saw some recovery in late afternoon to close off its low. Okay, and over in Japan, not so good news for Japanese automakers who felt the heat. As you mentioned, Nissan, Toyota, and Honda or slightly more than 2%. I think there's no surprise there, given that, their reliance on Mexican supply chain, who is now caught in this tariff crossfire. And the sell-off is largely driven by fears of escalating trade tensions, with investors bracing for potential retaliation, which they did from Canada, Mexico, and China. And on top of that, right, I think the yen strength is also adding extra pressure on the Japanese exporters. And will there be more downside? Well, I really think that it depends on how this trade battle unfolds, given that, the history of U.S. President Donald Trump. He has proven in the past that he could be quite flexible when it comes to decision making. So if things were to escalate further, right, market could remain volatile. But if we see some de-escalation, some U-turn from U.S. President Donald Trump, like constructive negotiation or some policy reassurance, I think we could see stability returning sooner rather than later. But for now, right, I think it's always better to be reactive than proactive at this point in time, and keep a close eye on, government response and currency movements.
Okay. Now back to the Singapore stock market as usual. Dan, the STI down 0.46%. So how do you think the STI fare in relation to the global movements? Any surprises when it comes down to the biggest movers and the sectors that they lie in?
Well, to be frank, STI is expected to be in the negative territory.
Yep.
Following what happened in U.S. market last night. It was actually, I would say, a pleasant surprise, if I may use the word, that we are only seeing a 0.48% drop in the STI.
Yeah.
I mean, personally, I'm actually expecting more. And I think that speaks volumes of the resilience of our local market as well. So in recent sessions, right, big caps like Sembcorp, SIA, Capital Land Investment have all been trending up. And today, while most of them have went into this profit-taking mode, the one stock that is standing tall is actually ST Engineering. It was up another 2.7% to hit a 20-year high of $6.03, driven by strong earnings and positive analyst coverage. And in addition, right, I would like to think that the surge in defense stocks in Europe amidst this geopolitical tension, especially in Ukraine, had also played a part in driving up the share price. And loser-wise, since hitting an all-time high of $3.32 2 weeks ago, Yangzijiang Shipbuilding has dropped drastically, with today a continuation of that downtrend. Generally, Singapore was also a notable loser since, its underwhelming results, touching a recent low of 70 cents.
Okay. Now, let's talk about some counters to watch. You mentioned Yangzijiang. Let's take a look at Yangzijiang Shipbuilding. Now, customers who initiated arbitration proceedings against 3 of its units over alleged contractual breaches, they have been awarded a right to a refund of $3.32 million in deposit. Now, how significant is this for investors of Yangzijiang Shipbuilding, and how much of this has been priced in, given how the proceedings they were filed all the way back in 2022?
Yes, so you are right that the proceeding was actually filed in 2022. So while I recognize that this arbitration case might have played a part in the drop in the share price of Yangzijiang Shipbuilding, the company has stated that, this case is not expected to have a material adverse effect on the group financial position for FY 2025. Moreover, it is a case that was filed back in 2022. So it's not something, it's not something new. However, as the share price has just hit all-time high 2 weeks ago, it seems to me that investors are taking this news as an opportunity, as a chance to take some cash off the table, some profit off. And in addition, right, there is also the recent proposal by the U.S. Trade Representative to impose fees on Chinese-built vessels that is entering the U.S. port. So this proposal, right, has actually raised some concern about the potential impacts on the China shipbuilding industry, leading to a notable decline in this Yangzijiang Shipbuilding's stock value. And if you were to ask me, right, I would like to think that it is more of a combination of the arbitration case, the slapping of fees on these Chinese vessels entering U.S. port and profit taking that have led to a 30% plunge in the share price in the last 2 weeks.
Okay. As you mentioned, Yangzijiang Shipbuilding shares down 3.3% as of the market close. But if you're just tuning in, we're in conversation with Dan Chang, investment specialist and trading representative at PhillipCapital. Well, across the region, Dan, all eyes on China's 2 sessions, the first one kicking off today. And I believe we can expect more on China's 2025 growth targets and the government work report by Premier Li Qiang tomorrow. But really, what are you expecting on this front in terms of some of the headline numbers and the expected support measures? What will this mean for Chinese equity markets?
Yes, I think I receive a lot of calls and texts from investors. I guess everyone is looking forward to these China's 2 sessions.
Yeah.
So these China's annual 2 session, right? Political meetings are set to commence today. I think it's the Chinese People's Political Consultative Conference opening today, CPPCC, and the NPC tomorrow.
Yep.
Okay, stand for National People's Congress. This gathering, right, are usually pivotal in setting the nation's policy and economic agenda for the year. So in terms of numbers, right, I think the consensus seems to be an unchanged target of 5% growth in China's GDP growth for the year 2025. And this, in my opinion, right, signals confidence in economic stabilization. And on top of that, right, inflation is expected to be lower to around the 2% mark, given that, we are seeing continued weak domestic demand. And the fiscal deficit ratio is expected to increase from the previous year 3% to about 4% in 2025, given the anticipation of a more proactive fiscal policy. And I think we have attested that since last September, right, we have seen the China government rolling out a series of stimulus to prop up the market. While the impact has been quite mixed, I would say, the resolution and the determination of these China government, I think, is quite evident. Okay, thus a shift towards a moderately loose monetary policy in these 2 session meeting may be expected, potentially involving interest rate or maybe even the reserve requirement ratio, triple R for short, the triple R cuts to stimulate more economic activity. And with the US-China tension set to heighten, I think Trump just signed an order to add another 10% tariff on China.
Yeah.
I think we might see a discussion on policy likely to be focusing on expanding the domestic demand, boosting consumption and supporting the private sector to counter all these external economic challenges. And of course, last but not least, the recent emergence of DeepSeek have brought a lot of optimism back to Chinese techs. And in this 2 session meeting, right, I'm expecting some discussion on strengthening the technological capability, particularly in the AI and in other emerging sectors, to drive further economic growth. Yep.
Okay, I see. And Dan, before we let you go, since you mentioned about DeepSeek, let's talk AI, because Tencent Holdings' Yuanbao AI chatbot surpassed DeepSeek to become the most downloaded iPhone app in China this week, highlighting that intensifying competition locally or domestically in China. How would you read into this and any initial thoughts?
Yes, so presently, right, this Tencent AI chatbot Yuanbao has become the most downloaded iPhone app in China, surpassing this DeepSeek, and I think it just highlights the very fierce competition in China's AI space. And I believe that a big part of the success, right, comes from this Tencent's ecosystem, very strong ecosystem. I mean, it's integrated into WeChat, which has over 1.4 billion users, and they are even tying into popular games that are in the Tencent ecosystem, making this adoption seems seamless. On the tech side, right, Yuanbao also leverage Tencent's Hunyuan AI model alongside DeepSeek reasoning capability, giving it an edge in these what we call conversational abilities. So I don't think it's too surprising to see Yuanbao receiving such good reception. But that said, right, I think there is a challenge here. There's a monetarization challenge here. I mean, after all, these companies are all profit-driven, right? I mean, they are all going for profit. So despite all this widespread adoption, the primary focus remains on user acquisition. So we leave a lot of questions about, sustainable revenue models for all these AI services. While AI chatbots are dominating the China app charts, the real challenge now is really how to turn all this hype into sustainable revenue. And I think it's something interesting to really dive into, and some food for thoughts for all of us.
I see. Lots to take home as well. Thanks a lot, Dan. That was Dan Chang, investment specialist and trading representative at PhillipCapital. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.